Okay. And what we're looking for is, I'm writing a new book and I want to put some quotes, maybe from you and from some other people. I'm interviewing a number of people. And, if you have any good stories, anything like that. So I'll ask you a series of questions. I'm waiting for Susan to join us. Wait, there she is. Just a second. Let me admit her and let me unmute her. Um, Susan, now I can. Okay, there you are. Susan, can you hear me?
I can. How you doing, Tom?
Okay, very good. David's on.
Great. Hi, David. How are you?
I'm doing well, Susan. How are you?
I'm good. Thanks for joining us.
Well, it's my pleasure, and I'm thrilled. The only thing is that when I looked at the questions you sent me, I don't know if I'm going to be that good for your book. So
No,
we'll
no,
we'll
we
talk it
don't.
through. We'll see what happens.
Those are just some general questions. So we'll go off of that thing anyway. So let me start out by just asking you to tell me your background and how do you get in the business, why do you get in the business, and just tell me about a little bit about your background.
I've been a fan of financial services for at least 20 years. When I graduated high school, I wasn't sure what I really wanted to do with for my life, and so I was doing different business things, kind of dabbling. Finally, I actually got a book in the mail because I was on these different mailing lists, and it was called "How to Make America Strong and Wealthy One Person at a Time," and it was by a guy named Don Mykert. And it was interesting. It was actually promoting a network marketing thing about financial literacy. And I thought it was really neat idea because you can actually get into their business and promote financial literacy for employers. You could do one-on-one planning to help people get out of debt. And I thought this is a pretty neat idea, and I thought it was really right up my alley. Um, and so later on, I finally got a job at a bank. I was a personal banker. And as a banker, I thought my job was to give advice. Well, no, it's more about sales. And so my job was primarily you got to get those checking accounts opened, you got to get those home equity lines of credit sold. I eventually moved up in the bank and became a service manager where I hired, trained, retained, and fired my tellers. But on a particularly busy day, I'm looking out over the platform, and I've got my platform banker there who's just having a cup of coffee with a client sitting there for an hour, and she's making at least twice the money as I am. I'm like, I could do that. I just need to see the path to do it. Finally, I left the bank, went to a firm who sponsored me for my licensing. I got my insurance 7 and 66. Um, Found some things. I wish I wasn't so short-sighted, but I found some things I didn't like about that firm, and went to a credit union because I figured with the banking background, bring that in with financial services in a credit union environment, it's going to work beautifully. And so at the credit union, I learned a lot about mutual funds, variable annuities, and we actually brought in a wealth management platform. And after a while, I just realized, I didn't know enough about life insurance. So I left the credit union after 3 years to go to an insurance firm so I can learn about cash value life insurance. I figured there has to be, it's a legitimate product. I don't know enough about it. I should know about it. So I went to go learn about it. And I've been an independent agent now for about 10 years. So I've had a long, varied career. I wish I could have started at one firm and just said that was it and go on, but that's just not the way it works for me.
So David, you're kind of in the retirement market, is that correct? Or do you
That's
work with younger people mainly?
yes, both.
Okay.
so I,
And so what percent of your mix is life insurance, annuities, long-term care?
um, quite frankly, annuities is going down,
Okay.
and that's partly because of the California regulatory environment.
Right.
California, years ago, back when I was selling them variable annuities at the credit union, we had these terminal illness waivers and nursing home confinement waivers.
Right.
I'm not finding those on today's annuities,
Yeah.
and so at least for California. And so I'm very while I work with a Facebook group, and I'm very cautious about what companies to represent and promote because the California regulatory environment is very different from just about any other state.
Yeah.
So when I'm looking at that, to me now I'm looking more of how can I move assets out of qualified plans to put into life insurance so that the life insurance writers can provide that liquidity when needed. Whereas the annuities, it's going to be locked in. And I have a theory about that. My theory is that the California Department of Insurance wants to put a barrier in place to prevent people from being able to liquidate their annuities to offset the medical expenses that could be incurred, and so that it negates the tax deduction and the taxes. So let's put that barrier in place, and let's wait for them to not touch that money so that the beneficiaries have to cash it out at their tax rate. That's my feeling. I don't know if that's on purpose or not, but certainly fits
What
the narrative.
what they typically say is they're protecting their the residents of the state of California from these insurance companies, and in fact they do exactly the opposite, because those riders are what protect the people of California, but then they slap on all these rules and regulations. But anyway,
Exactly.
so are you 100% life insurance? Are you 90% life, or what are you doing?
I'll say 75% life insurance.
Okay, and
Uh,
then what's the other 25?
I'll say about 20% annuity, 5% long-term care, if that.
Okay,
The long-term care insurance market in California has been kind of decimated too.
right,
There used to be the California well, it still exists, but sort of. There's the California Partnership for Long-Term Care.
right.
And the problem is that when it first came out, I think there was like seven different companies. Today there's only two. And one of
Mm,
them you can't sell as an agent, and the other one I wouldn't dare sell as an agent.
right.
So really the California partnership, that's pretty much gone. So I'm looking at, if I'm going to use long-term care, it's going to be a standalone asset-based long-term care policy, either with an annuity-based or life insurance-based with a rider. Just depends on the client situation, of course.
Okay, so now with life insurance, give me your percentage. What percentage is term, maybe IUL, whole life, and then whatever else you do, if you do GUL or whatever. Just kind of give me a breakdown of your life business.
I'll say my term 20%. For I usually use IUL right now,
Okay.
and that's pretty much the remainder. And I use maybe 5% GUL.
Hmm. And I see you get crap on life insurance, your website, because people are attacking you for using IUL versus whole life, and I'm kind of in the whole life camp, but I'm not against the IUL policy. It's just I saw what happened with UL and all the policies that blew up, when interest rates were 17%. And
Hmm.
then VUL actually has done very well if people stayed in. The problem is they
Right.
don't always stay in. Their behavior hurts them, and they get out when the market crashes, and then they get in when the market's at the top. The nice thing about IUL is you never have that zero. And zero's your hero in a down market. And so I get it. I see it. I just don't own it.
Hmm.
I've been thinking about it, but maybe this can be your part in the book. Tell me what you really like about IUL, and tell me where you think it fits.
IUL, well, first of all, IUL is just another version of cash value life insurance. They're all
Right.
about the same, other than the variable life policy, which has its own reverse dollar cost averaging problems with it. So when the market
Right.
goes down, of course, we're liquidating more shares because of the cost of insurance that goes on. So I'm no longer securities licensed. So I now have a bias, legitimate bias against VUL because I can't sell it.
Yeah.
Um, as far as IUL versus whole life, really, it depends on what the agent likes to sell. But one thing I do find with IUL is that at least there's an overloan protection rider in the retirement years. You usually have to keep the policy in force for at least like 15 years and be a certain minimum age. And then, should it happen that you borrow too much out of the policy, you will not get that phantom income tax bill. There's only one whole life company that I know of that does offer overloan protection. That's Penn Mutual. Good for them. But almost every IUL I've seen has that feature.
So let me understand that. So that even if somebody first they can withdraw up to their basis, beyond that they can take loans, and if they take too much loans, the policy can literally blow up. And if the policy blows up, there'd be normally a tax hit going all the way back to all the money that any of the gains that they took out would be taxable. But you're saying that these IUL policies have a protection that the company would absorb that, or how does that work?
Basically, the company would lower the death benefit enough, whatever it is that they do. I don't know exactly how they do it. Essentially, the policy will be done, except the policy stays in force. Because as long as the policy is in force, then there won't
Right.
be that triggering tax bill.
So
Eh,
they could lower the death benefit to $1,000 or $100 or 10,000, whatever it is, and
Whatever it
then the
is.
cost of insurance would be so low that there'd really be no impact. And as long as the policy is enforced, when the person dies, then there's no taxable event.
Right. Now, there probably won't be much death benefit to write home about, but
Right.
at least you don't have the taxable event to happen, which can happen
Well, that's
without
a
that
huge
rider.
benefit that I don't think, I mean, I really wasn't even aware of that, and I'm pretty smart in this business. And
Yes.
so if I'm not aware of it, then I'm sure 99.99% of Americans aren't aware of it.
Yeah. Now, even in California, most of the IUL policies I've seen also have the living benefit rider. So you also have not just a terminal illness, which is everywhere, but you also can get the chronic illness, which is the equivalent nursing home benefit, and you can have a critical illness benefit, which I'm not finding on a whole lot of whole life policies. And
Mhm.
so, as long as the IUL is structured properly, and it's up to the agent and advisor to set the expectations and make sure that it's funded up to the MEC limits, you're not going to see a whole lot of that issue that was happening back in the 70s and 80s because of those interest rate environments and also how life insurance was sold and positioned back
Right.
then. Now, let's be honest, I was born in 78. So I
Mhm.
don't remember how life insurance was sold back then. But I've seen all the recordings, and they would say, whole life at half price, or get twice the benefit for the same premium. Well,
Right.
that's assuming that everything stays constant going forward. With IUL, if it's structured properly and the expectations set well in advance, no, you're really funding the box versus paying the curve, and that's the way that Guy Baker talks about it in his video about the box. As long as that box is full, so that you have enough interest earning and compounding within in there, and you also know that it depends on how the indexing will do. Either it's going to be great or it's going to be zero minus cost of insurance. So it's far more manageable, a little more transparent, in my opinion.
Now, is there a particular index strategy that you like? Like, just because there's one bad year, that's a zero, but then many companies start the next year like, hey, if it goes up 10% the next year, hey, you get 10%. So are there index strategies that you like or basic? Are there indexes other than the S&P 500, the basic ones? There are some really new indexes that are out there, and tell me your thoughts around that.
I like what makes it simple for the client to understand. And so whenever I'm talking to a client, it's always about the S&P 500. I don't talk about any other indexes. In fact, the more complex, one problem I have with some of the indexed companies out there is that they try to make the product into a quasi investment product. And it's
Mm-hmm.
not. It should be insurance. Let's keep it simple so the client can understand. So I prefer an annual point to point that's subject to a cap. And lately, those cap rates have been coming down. The same reason that dividend rates have been coming down. It's the same
Right.
factors. The other one I do like is an unlimited cap with a spread. And
Right.
that's not a fee, it's just a deductible against the total earnings for that year. So I like both of those. What I don't like, and what I'm finding out from the rest of the industry that who I'm talking to, we do not like the multipliers. These multiplier indexes have an asset charge, whether it goes up or whether it goes down. And so you really, with those, you cannot say you can get the upside of the market without the downside risk because of those asset charges that happen no matter what. Um, so I've been talking with Cheryl Moore about that and some other people, and we just don't like them. I have a blog article on that just to say because clients can manage their own policies. If they wanted to reallocate in there, I just want them to know I'm not a fan of them. Don't do it, but it's your policy. You can do whatever you want.
Mhm. Now, what I really like about you is you're a student of the industry and I mean, you watch videos, you've read blogs, you've read articles, you've read books. And, I think when I see you on your website or on the Facebook site, you really help a lot of advisors by saying, hey, just watch this or hey, read this. I think that's very helpful to new advisors. So tell me about how you became a student and where you go to get your information.
Well, Tom, one of the places I go to is you. You've got a ton of great stuff in your YouTube channel. If you've ever seen my website, I have a bunch of your clips that's also in there under a video learning library because you talk about a certain topic and you make it very simple for people to understand. And so you're one of those sources. I have I've always been a student of the industry. I've been a student of any industry, no matter what I was in. And I kind of got some of that from my experience back in the network marketing company. You got to be a sponge. You got to learn from everybody. So I was learning from Jim Rohn, Zig Ziglar, Brian Tracy, and I still learn from people like that, Earl Nightingale. What I find for our industry is that we need more specific coaching, training, and guidance because our industry is very unique and we're really selling an intangible. And to get more people engaged, we need some more specialized people. And so the $1 Million Roundtable, I've got some of the classic recordings: Ben Feldman, John Savage. I also follow Van Miller,
Hmm.
fantastic. So I follow, and David McKnight with the Power of Zero, and the
Right.
Tax Train is coming. I follow all of it, and while it can be too much, after a while you kind of build a philosophy of what you like, and you learn how to articulate it far better. It just, unfortunately, you can't teach it for a brand new agent necessarily, unless that new agent could come on board with a agency that has that philosophy that knows how to articulate it, which would be fantastic. I haven't found that myself. Um,
Hey, what's your website? Because maybe we can even put that in the book as a resource, for advisors.
well, absolutely. Well, I have the URL, which is davidkinderfinancial.com,
Very good.
and I just updated it yesterday because I found a clip from the Count of Monte Cristo, which is, in life we are either all kings or pawns of men, emperors and fools, and that's from Napoleon Bonaparte. And when we look at some of the agenda for our money and who's behind it, which is the banks, the financial institutions, Wall Street, and the Internal Revenue Service. And we see that separately and together, they all have an agenda, and it's not necessarily an agenda for the consumer, for the public. And so, knowing how they're working, we can now create a stronger strategy to put them in a better position, especially with liquidity, use, and control. So I have that. As far as for other agents, my YouTube channel. Um, well, it's David Kinder CHFC. I've got a few things on there. Um, I also have some unlisted things that I keep on the down low because I actually did have the MDRT contact me and ask me to take down some things. So I just put it
Right.
unlisted so you can't search it, but I have a listing of a whole bunch of things.
Right.
Um, But yeah, I look for the people who seem to have a very strong philosophy, who know how to articulate it, because as you say, this is no longer a knowledge business. This is a words, language, and stories business. And I want to know how people articulate their value proposition. How do they talk about different concepts of life insurance? How do they talk about different things? And because sometimes I get in my own way. Um, and when I hear something from other people, that I have to process it. I'm a student. How do I process
Mhm.
it to make it fit for me, and how do I make other people comfortable with it or not? If I can't make someone comfortable with it, they're not buying, and I won't feel good selling it either. So listening to other people, really is more of an art form. We just need to know enough of the science behind it to really serve people.
So let me ask you this. It kind of leads into my next one. Give me some stories, or if you got powerful questions or stories that have worked in the life insurance. I don't know if you've delivered any death claims, or if you've helped people retire and get tax-free income, or just I'm looking for some ideas on stories that you've actually lived through, and what are some of your success stories or questions, powerful phrases, whatever.
Hmm. Well, if anything's going to give me a brain block, that one's kind of doing it there.
Well,
Um,
and that's fine. And David, what you can do is you can think on it, and you can either send to me or Susan. Susan helps me put it into a draft, but you can either do a quick little video clip or audio clip and just send it to us, or even type it out if you want. If you think of anything, you say, "Gee, I wish I would have said that." Just send it to us, because
okay.
we're going to be doing this over the next. I'm wrapping up my book. I'm about 80% done, and I'm going to be wrapping it up hopefully, in December, January, and we'll probably get it out sometime next year. I'm anticipating that this market at some point is going to crash, and the book title may even be "How to Survive in a down market" or something like that. Because
Mm-hmm.
if people used IUL, and if they used annuities, and if they used long-term care or a rider on one of these policies, they can still have a great retirement even in a terrible market. And
Yes.
so I don't know if Trump's going to get reelected or not. I think right now it shows he probably will, but there's so much against him every day. And if you get an Elizabeth Warren in there or something, I mean, this
Yeah.
market could go down 30, 40, 50% easily. And so I don't know when I'm going to launch this book, but I may, you know, pause for a little while just to see what happens with the election, the markets, and everything. But tell me kind of some of your thoughts around where you see. I mean, taxes are going to have to go up. I mean, I think we can agree on that. But tell me what your thoughts are on going forward on the market and taxes and things like that.
Well, I'm not nearly the great economist that you are. I follow economists, and when things make sense, then I incorporate it to my talking points. Quite frankly, I never went to college. Doesn't mean I'm not smart. Just means there's certain things that I know that are not in my lane.
Right.
And reading the Wall Street Journal makes me anxious. I don't want to read it, so I don't subscribe to it. I just don't. That's not who I am. I'm far more of a planning type than trust me with your money because I know what's going to happen type. That's not
Right.
who I am. Um, what I can see is I share a lot of the same talking points that you, David McKnight, Van Miller, we're all talking about is that when the market comes down, I mean, I already learned from 2008. Look, in 2008, I had already changed firms. I didn't take any clients with me from before. I had a non-solicitation agreement. I left those clients behind. But I remember those 2 months from September to November. I mean, 2000 to 2002 was kind of bad, but that was gradual. It was slow. But 2 months, the market lost 50%. I'm like, it wasn't my fault, but I felt like some of these people they're in this situation because of me, and it took them, assuming they didn't liquidate, it took them 4.5 to 5.5 years to get their money back to where they were before the crash. So that's one of the awakenings that happened. Even though I was curious about life insurance, I didn't know what I know now. Um, Life insurance is the ultimate Swiss Army knife in financial services, both on a tax perspective, on a cash reserve perspective. Um, it, there is nothing better out there. Unfortunately, I believe the insurance companies are either told not to promote everything or they're all in self-preservation mode because they don't want anything to happen to the tax status of life insurance since the 80s. Um, and so one of the reasons why I have my blog is to help dispel a lot of the myths out there. I want to make sure that people understand what they're buying for cash value life insurance, assuming that it's a properly structured policy that's really designed to build up a lot of cash values. Because you can have that reserve, so when the market does crash and the market comes back, I mean, they're going to start printing more money. So the life insurance does great with a higher inflationary period. Um, anyway, I know I'm kind of going in circles here, but the thing is that most people don't understand life insurance, and part of my goal is to help put it out in writing so that especially for clients that I'm working with, if they have a question, I heard Dave Ramsey say this, I heard Susie
Right.
Orman say this, whatever it is, or my Primerica rep said this, or even my Merrill Lynch guy said this. Not only can I tell them things over the phone, but telling people things over the phone is not good enough. They've got to be able to read something that they can internalize and interpret and digest. Because we're in look, I'm in the land of California where we've arrested two annuity agents.
Right.
I'm not going to be stupid. you know, Granted, one was dismissed, the other one was convicted and then overturned, and I'm not going to do anything that's going to make anybody uncomfortable. I'm not going to do anything where I can't back up what I do in writing. And so you got to be able to keep the business on the books. And one way to do that for me is I've got those blog entries. I quote them to a lot of people on that Facebook page because there's a lot of agents that don't know what they're talking about.
Right.
I mean, you get the Primerica guys that say, well, you only get the cash value or the death benefit. You don't get both. I'm like, you don't even know how wrong that terminology is.
Yeah.
Um, so being able to set the record straight and citing textbooks, citing IRS resources, citing those official resources that show one, I kind of know what I'm talking about, and two, other people don't know what they're talking about. Um, so I think
Yeah.
that's one area because
And
I
and
use
I
those to
think,
train agents.
yeah, one of the key ways to handle objections is to use third party references, because when you're an advisor, you have an inherent conflict of interest because you're getting paid to sell the stuff and they know that.
Right.
But like, I'm not getting paid whether they buy it or not. David McKnight's not getting paid whether they buy it or not. Van Miller's not getting paid whether they buy it or not. I mean, if you're selling it. So that's the power of third party references, is that, you can use these people who do not get paid whether they buy it or not to say why Ramsey's wrong, and others. So look,
Well, true,
I'm
but
kind of got to.
it's also I'm sorry, but it's also going past that source to go to where that source information is. So, for example, how do we know that the banks have a ton of money in cash value life insurance? Well, let's go to the FDIC website. Here it is. It's under this RC1F. Well, I forgot what the code is, but I looked it up. I've got it for the top four banks in the United States. What does the IRS say? What do these other publications say? So it's not you guys are great, but I've got to go deeper and go straight to that source and figure out is that really the truth and really the case? For example, so many people think that the A in IRA stands for account. It's not. It stands for arrangement. Well, who determines that arrangement? Who's that arrangement with? Who sets those terms? And so when we start looking at the proper term, because if you look up IRS publication 590 A and B, right there on the front cover it says individual retirement arrangements. It doesn't say account. An account implies I have ownership. Arrangement means I've got somebody else I've got to answer to. And who is it? It's the United States government and the Internal Revenue Service.
Yeah, and back when they started the IRA in the congressional record, it says individual retirement annuity. That's what the A stood for way back when. So, hey, I got to wrap this up. So, do you have any final comments, any final thoughts? And again, you're free to send in anything if you think of something in the future and say, geez, I wish I would have said this. Just kind of give me a wrap up comment, if you would.
Well, I would say that depending on the regulatory environment of the state, annuities are fantastic to put in. I really love what Curtis Cloak says, which is buy income and invest the difference.
Mm-hmm.
And what you invested in could be a portfolio, or hey, invested in life insurance. Either way, and so that you can have not don't just think about the cash flow. Think about the taxes. Think about the economy. Think about demographics. All of that needs to fit in.
And asset protection, because that's another reason why I have a lot of money in life insurance. I was just with David McKnight just a week or two ago, and he was shocked when I told him I have more money in life insurance than annuities. Now I own 11 annuities, but I have more cash in life insurance because I believe in both of them. You got to have a guaranteed income, but I like the fact that I have flexibility, I have tax-free, plus it's protected from creditors and everything else.
Well, California doesn't have a whole lot of that, so I don't really talk about that creditor protector. In fact, one story with an annuity, just because it happened when I was at the credit union, I had a guy came in who was a client referral, which I rarely got because I didn't know how to get referrals. And he came in and he had about 300,000 with a brokerage. And I shared with him at the time the MetLife 666 program, which was 6% bonus, 6% step ups, and 6% distributions for life, which was a great deal. So it was a bonus annuity. And what happened was that we were looking at taking the money, do a transfer out of the brokerage, which also happened to be our firm. It just happened to be in the brokerage side. But unfortunately, he still owed some child support. Now, the child support couldn't get at it, but neither could he until he authorized that money to go back out. And so I called him up, told him the situation. He authorized it, was fine. We put it into the annuity. What's interesting is that 6% bonus paid more than his child support. So it was a beautiful story just for that particular program. Don't find a whole lot of that anymore, but that's the way it was about 12 years ago.
Well, great.
Yeah.
David, I appreciate it. And what we'll do out of this is we'll get a quote, a paragraph or two or a story, and then we'll send it to you before we put it in the book so that you can look at it. I always hate when I get interviewed and people misquote me. I hate that. So that won't happen. We'll send it to you, and when you authorize, we can do it.
Okay.
And we'll put that in the book, and then you will always be able to buy that book at a discount. We'll give you a note of how you can do that in case you ever want to use it. So,
well, thank you. Yeah, I mean, it's like I was telling somebody, it's like it's one thing to write your own book; it's a whole other thing to be quoted in someone else's book. So that's a different level of authority. So I appreciate that. Thank you.
Yeah. So thank you, Susan. Do you have anything? Because I know we got Moshe coming up here in just a few minutes. Do you got anything for David?
I think I'm good. And David, I'm going to spend some time on your website as well and on your YouTube channel. So if I have any questions, is it okay to shoot you a quick email?
By all means. And Susan, sometime next year, we'll get together. We'll talk about my ebook and such, because I'd love to get that, ready for real publication rather than just handing out a PDF document. So,
sure. No, that sounds great.
And David, she is awesome. I interviewed or I reviewed probably 100 different writers before I hired Susan. And when I was reading her work, it felt like it was my work. I mean, she takes complex things, makes it simple, makes it clear. And when you go to write a book, it's hard when you have to sit down and start and say, once upon a time. It's better when she can send you a chapter and you say, oh no, take this out. Oh, let's add this, put a picture in here, put a graph in there. And now you're editing versus once upon a time. So,
Yeah, my ebook is 56 pages. It's not bad, but at the same time, I know it's kind of choppy, and so I've already got kind of a good outline for it. At the same time, sometimes my style isn't always the best style to read, but I try to write the way I talk so that I think it's clear. So
Oh yeah. No, I was just telling Tom earlier this morning. I always learn something from everyone that everybody that I talk to and work with. You guys are awesome too. So.
well, thank you, David. I'm going to end this meeting, and then Susan, I'll send you the recording, and then we'll log back in for Moshe. Is that good?
Sounds perfect. We'll see
all
you.
right,
Talk to you then. Thanks, guys.
all right.
Thank you, David.
Thank you, Tom. It was an honor. Appreciate it.
All right. Bye bye.
Bye bye.